Morning. Welcome to day 2 of the NWR Virtual Investor Conference. My name is Kylie Merritt. I will be your host for some of today's sessions. The entire AusBiz team will be here with you throughout the day to moderate some of these great presentations we have from Australian small caps. Without further ado, let's get into it. Calyx is our first presentation this morning, a multi-award winning Australian tech company focused on environmentally friendly solutions for advanced batteries, crop protection, aquaculture, wastewater, and carbon reduction. So new materials produced by Calyx have demonstrated similar properties to highly active nanomaterials without the safety concerns and high cost, but with many benefits. These guys have got a heap of projects underway, particularly looking at Europe. And we're going to hear very shortly from the CEO and MD, Phil Hodgson, and we've also got Darren Charles, the CFO, standing by to take your questions. Speaking of which, if you do have a question, you can see at the bottom of your screen there a Q&A box. Please enter your questions in there as we go through the presentation, and we will do a little Q&A session at the end. But for now, Phil Hodgson, over to you.
Excellent. Thank you very much, Kylie, and welcome all. And thank you very much for your time this morning. Just to run down a little bit to sort of latest breaking news, if you like, with Calyx. Obviously, I'll talk a little bit about the business as we run through the presentation. But for those of you who are familiar with the company, would have seen we've been on trading halt for the last 2 days. We're just released some announcements to the market that we're coming back onto the boards this morning. And that's because we've had good interest in a placement that we're just wrapping up now, and we're going to be issuing a share purchase plan. So the placement was for 14 million, and the share purchase plan will be capped at 3 million. And part of today, I want to use today to talk about why we've done that capital raise and what it is we're going to be using those funds for. So let me just run through a quick introduction to Calyx first. And one of the things that has certainly, I guess, surprised us to a little bit of an extent, but maybe the investment community to a greater extent, is just over the course of the last 12 months and certainly 6 months, there's this investment theme that's really starting to blow very hard, and that's environment, social, and governance investing. A couple of little quotes here about how this theme is really starting to pull companies, countries, and investment funds towards investing in ESG themes. And one of the things that I'll be talking about today is why that has now prompted us to go harder and faster with all of the opportunities available in front of Calyx. So just in terms of those ESG themes, just to give you an idea, 50% of global GDP have now committed to net zero carbon by 2050. Top companies are committing to net zero carbon by 2050. Even investment funds are doubling in terms of exchange traded funds, for example, ESG themed based investments. And enormous amounts of capital are going to be required to achieve those sorts of targets. And the International Energy Agency have estimated perhaps 3 trillion per year needs to be invested over the next decade. So this is something that I don't think anyone out there is not familiar with, but the numbers are truly staggering. And just in terms of what we do and why we want to accelerate, if you have a look at our different lines of business here, we're in water, we're in CO2 mitigation, we're in biotech, we're in advanced batteries, and we're in sustainable processing. I'll talk about why we're in all of those different lines of business, but there's one common technology platform, a patented Australian technology platform that's ours, that touches all of these different lines of business. And if you can have a look at the sort of subsets of those lines of business, you can start to get a sense of what is really sort of, I guess, catching the tailwinds of those ESG investment themes: water treatment, aquaculture, CO2 mitigation for cement and lime. In biotech, we're looking at safe, environmentally friendly crop protection products and marine coatings. In advanced batteries, obviously looking at advanced cathode and anode materials for lithium-ion batteries, but we're trying to make them safer, more environmentally friendly and recyclable. And in sustainable processing, it's about how do you electrify industry as you move forward, so that industry is available to take renewable electrons, if you like. And so all of these themes are really catching those ESG investment tailwinds. How does that one technology stitch it all together? Well, it's a new type of kiln. For those who are unfamiliar with Calyx, all we do is heat up stuff just a little differently to everyone else. At the core of our technology is this reactor tube. I've got a little toilet roll here to sort of demonstrate, if you like, what it is, but this tube we heat externally. So we can heat that with normal natural gas or biomass. We can heat it with hydrogen. We can heat it with electricity, doesn't matter. But that tube in our plant in Bacchus Marsh in Melbourne, that's about 1.8 meters in diameter and 22 meters high. So you're getting sort of idea of the size of this tube, big. We heat it up to 1,000 degrees centigrade. And whatever it is we're trying to heat up, we grind up to quite a small powder. If you feel it's sort of like holding a lump of flour in your hand, and basically that just gets dropped down the tube. And as it floats down through this red hot tube, the radiative heat from the walls of that tube go into the powder, and that's what does the heating for us. So we don't contact the powder with any of the furnace gases or heating medium. It's just absolutely separate inside the tube. And what advantage does that bring? Well, in terms of some of our lines of business, and these three sort of businesses at the bottom here, in water, in batteries, and in biotech, they're about creating what we call very active particles. So as those particles sort of float down inside our tube, we can control the temperature and the residence time of those little particles really carefully. And as little trapped gases inside those particles come out of those particles as they get heated, it creates a pore, and that pore, those multiple pores basically form what's sort of like a honeycomb type structure. So we can maximize that porosity and high surface area or porosity. So 1 gram of this material is sort of got the surface area of a football field. And so that high porosity equates to value and extra features that we then put into the water business, the biotech business, and the battery business. And I'll talk about each of those in turn. The other advantage of the technology is if you're processing limestone, and for those who aren't aware, limestone is the main product, obviously, in cement manufacturing. But what most people may not be aware of is half the weight of a lump of limestone is CO2 trapped in the rock. And so when you heat limestone to make cement and lime, that CO2 basically makes its way into the flue gases of a cement plant and out the top, out the stack. And that's why the cement and lime industry is the most CO2 intensive industry. And 2/3 of their emissions are coming from the rock, not from the heating, from the rock. Of course, with our technology, just a different type of way to heat up that material, then that CO2, as it comes off the limestone particles as they fall down, it makes its way back up to the top, and it's basically a very high purity CO2 stream, ready for usage or sequestration. So it's already separated out and doesn't need to be separated from the furnace gases. And that's why the cement and lime industries are so interested in our technology, because it's a step with no extra theoretical energy penalty to directly separate and capture CO2 from their emissions. And then there's the third sort of advantage of the technology. I mentioned before that we're heat agnostic. We don't care if it's a flame or if it's an electric element. And of course, as industry electrifies, as they try and use more and more renewable electrons that will be produced over the next decades, that electricity is already in one of our calciners that we've built, one of our special kilns we've built. That's already being used. We already have 100% electrified kiln, and the amount of inbound inquiries we're now receiving, even over the course of the last 3 to 6 months, has been quite overwhelming in terms of the variety and the number of industries interested in electrifying their heating processes using our kiln. So hopefully that gives you an idea of how the one sort of core technology ties together, if you like, all of those sort of seemingly different lines of business. Just in terms of how we look as a company financially, you know, we're not just a science experiment. We actually do earn some revenues. The water business, where we're making a very active what's called magnesium hydroxide as a replacement, if you like, for caustic soda, which most people will be familiar with. That part of our business is growing really nicely, and so if you like, sort of the revenue engine of the company. We've got direct sales and distributor sales in that business. And those sales are growing very nicely. We acquired a business in the US in December 2019. That business has continued to grow very nicely for us, both in terms of revenues and in terms of margins. And so the advantages, I guess, of the way we do an alkali, a magnesium hydroxide for water treatment, is really starting to flow through nicely into our revenue numbers. And so you can see there, obviously, quite nice growth. And then there's this other bar you can see on top of the dark blue sales bar, and that's income that we receive from grants and projects. And these are grants mainly, believe it or not, from the European Union, who are very interested in decarbonising their economy and who've given an Australian company grants to actually go and develop decarbonisation solutions for their industries. So we're working with the Heidelberg Cements of the world and the Cemexes of the world to develop that CO2 mitigation technology. And so there's quite a big proportion of our income coming in from those projects. We've built our first pilot in Belgium. We're in the process of design of our second plant, which will go in Hanover in Germany at a Heidelberg cement site. And those grants are secured for another 3 years as we move through and develop and then build that project. So that part of our income is important as well and secured. And of course, as I mentioned before, we have the growing revenues in our water business. So we're not just a science tech company. We actually have sales and growing sales very nicely. Just in terms of the investment opportunity, I've talked a little bit about this when I described the technology, but in the water space, we're really about direct and distributor sales. We've been in market since 2014. We're able to grow to about 40% of the sort of Australian market for the particular product we're targeting in the space of 3 years. And that's because of the technical and cost advantages our technology brings. In the CO2 mitigation space, you can see there we've had 28 million euro in EU funding now, so 12 million for our first project, 16 million for our second. In the biotech space, we've had our first initial sales for a crop protection product in the last European summer, and we're developing our Australian regulatory approval in that crop protection space. And also very recently, we announced a new product development line in anti-foul marine coatings. This particular line of business is all based upon a very high surface area, what's called magnesium oxide, safe, environmentally friendly, but just help bugs, bacteria, they just don't like it. It's like a repellent. And so this biotech space is all about that mode of action for that particular product. The advanced battery space is about making, again, very porous, controlled porosity materials for anodes and cathodes for lithium-ion batteries. I'll talk a little bit about that as I move through. And then sustainable processing, as I said before, is all about electrification of industry and those industries that are interested in that. And just the tailwinds that are blowing through to support each of those lines of businesses with ESG investment are pretty clear and strong behind us. You know, water is becoming more important. Germany's been taken to court by the EU for pollution. The price of CO2 is in the European trading systems jumped 740% in 4 years. The EU has banned one of the largest selling fungicides from February this 2021, and so finding better crop protection products is important, etc. So I think, you know, the ESG tailwinds, both in the investment community and also what companies are trying to achieve, are really laying nicely into our lines of business, and that's why we wanted to accelerate. If we had a look at the number of deals, and we talked about this at our half-year results back in March, early March, the number of deals and opportunities we have to deal with have really grown just in the last 6 months, and we need arms and legs to deal with it all. So if I take a look, for example, at CO2 mitigation, Here, we've got 6 deals that we're looking at in cement and 4 in lime. And so these are inbound inquiries. They want to discuss how to license our technology. We're not at fully developed stage yet. We've still got a commercial demonstrator to build in Germany, which we're doing now. But these guys wanting to talk license now. We need engineers to develop those feasibility studies, and we need business development skills to help manage that deal flow. And so part of the raise is certainly around helping us resource up to manage that sort of interest and deal flow. You can see here in biotech and batteries, quite a bit of money there that we want to spend on lab and properly resourcing our labs. At the moment, we create these new materials. We sort of send them out to get tested at labs. They cost a lot. They take a hell of a long time, and it's just really slowing us down. And so, what we wanted to do was in-house that capability across advanced batteries and biotech, and just get on with it. So, expanding our test program, increasing our lab capability. And then I'll talk about the acceleration items that we're aiming for as a result of that investment. So under each of these is an investment case. In water, we've proven up our business model nicely in terms of our US market entry. We want to invest a bit ahead of the curve now. That business had been bootstrapping nicely, using the cash it was generating to expand its operations, but we can move more quickly. We want to put 2 new plants in, one in the EU, one in the US. If I look back and I think, what could I have done to go more quickly in US? It was probably to get a plant on the ground up front and start to expand from that, rather than trying to support that business expansion from Australia. And of course, with COVID and travel restrictions, that just makes it even more difficult. It'd be very hard to contemplate an EU market entry now without just having some resources on the ground. And so that's what we want to do there. We'll put some resources to grow the US a little more quickly, but we want to expand that EU market off the same successful business model we've applied in the US. So a plant there, some resources there, and then we have a base to really try and grow that business quickly from. And then sustainable processing, we want to get 2 feasibility studies done there. We're looking at multiple opportunities there. One in spodumene processing, which is hard rock used to extract lithium for lithium-ion batteries, so a battery theme there as well, but spodumene processing through our calciner. Another opportunity there in the refractories industry, so making sort of these magnesium blocks for iron and steel works and those sorts of things as an insulating material. But that's a big industry and they need to decarbonize as well. So they're interested in the technology from that perspective. So I want to drive these businesses forward faster with the tailwinds that are there, and I don't want to be constrained anymore. We think it's the best deal for our shareholders to go get a little bit of capital and you can and drive these businesses faster. And you can see the capital splits there. We've got just 25% or so coming into internal expertise, so building arms and legs. 31% is going to be devoted to some externals, like every single agreement we negotiate requires legal input. That costs money. And we also need some consulting, deal advisory. That all costs money. And we need, with the amount of opportunities in our plate now, to manage that. And the last bit, the majority of the capital is into capability capital, as I call it. That's plant and that's laboratory. So that's investment in the business, into enabling assets in the business. So that's where the majority is going. In this presentation, which has just gone up onto the ASX, there's a breakdown of each of these businesses and what the investment thesis is. There's also a little bit of a feature there on batteries, where the last 3 months of development work, despite the fact we have to send all these results out all the time, all our samples out all the time and wait for the results to come back, we've still managed to lift our battery performance another 10%. And so we're already well above the commercial best in class lithium manganese oxide cathode material. We've started to develop some really interesting shapes. You know, this one here called cracking the onion. These onion shapes, they're made in the lab by sticking very tiny particles together, very expensive and time-consuming process. We're starting to develop those shapes in our sort of industrial scale process now. And so that's helping us improve the performance of our batteries up towards the the lab theoretical sort of best-in-class performance. And so that this is, some of these results are the reasons why we really want to accelerate our battery development program. These are early days half cell results, but we really want to take this quickly through to a commercial pouch scale type format for lithium-ion batteries. And so that's the reason why we're putting quite a bit of the capital raise into batteries. And then, as I say, these others outline the current status, investors' thesis and targeted outcomes. And then in this final slide that I'll just cover quickly, here we cover each of these businesses, what we said we'd do at our half-year results, and then in blue, what the targeted acceleration outcomes are from this capital investment program. And so again, this presentation's up on the ASX website now, and I'm happy to answer any questions, Kylie, from the audience.
Great, thanks, Phil. That was really interesting. Just again, I know we've got quite a few people on the presentation. If you do have any questions, you can pop them in now. We've got a couple coming in. I just wanted to ask you firstly, though, Phil, you sound so passionate about this technology when you talk about it. It's great to hear. What excites you the most about the opportunities ahead for Calyx?
Well, actually, I get asked that question a lot, and I sort of always gravitate to all of it. But I think if I was to think about like the here and now, 6 months ago, even 6 months ago, CO2 mitigation just was not on the radar of most Australian investors. It was certainly on the radar of Europe, and even not on the radar of most people in the States, I guess, or certainly most of the political there. But the turnaround we've seen in the last 3 to 6 months in interest in CO2 mitigation has been just substantial. These other themes are all clear and playing out well and those sorts of things, but the focus around CO2 mitigation here in Australia that's really starting to come to the fore is probably exciting me a lot at the moment. So if I had to pick one, that would be it.
Would be it. Okay. Let's have a look in a bit more detail at the placement this morning, excuse me, and the SPP. Can you give us just a bit of a sense of, I guess, if you could put a percentage term on it, just the increasing growth that this extra capital will give you above BAU?
Yeah, so just in terms of the growth, we've outlined the sort of key extra milestones that we think we might be able to achieve with this additional capital. And so in the US, for example, it's an enabling investment to really help grow that revenue. Our target, let me put it this way, our historical performance in Australia was to get to about 40% of the market in Australia in the space of 3 years. Now that's about a $10 million market in Australia, but in the US, that's a $100 million market. And so we're only at about 8% of that market now. And so this enabling capital, provided we can grow in a similar way to we did in Australia, is really important for us. Will it be 3 years? Will it be 4? I don't know. But that's the sort of numbers that we're really going after in the US with the water business. And then, of course, the EU to follow on. So this will be enabling capital to start that process in the EU. With the other lines of business like CO2 mitigation, sustainable processing, this is about actually de-risking and bringing forward some of the commercial discussions we're already having. And so people will start to see, as we can announce those deals, people will start to see what value these counterparties are attaching to those deals. So that will help, I guess, with an outlook on revenues as and when these technologies are developed and ultimately then get rolled out. In the biotech and advanced battery space, we were obviously a little earlier, but these are about de-risking and speeding up this early stage research and development. And if we can achieve an advanced, in our advanced batteries, for example, our first battery module in a commercial format, and the performance that we've seen in these early experiments carries through to that commercial format, then sort of our 3-year program, which we're about 15 months into now, our 3-year program to develop a commercial material is on track and on target. So hopefully that gives you a sense of, I guess, what the investment return is that we're looking at.
We've got quite a few questions coming in on sort of the tech side. I've just got one more question while we're talking about the placement. A question from Hamish, just after a bit more detail on what this means in terms of an increased cash burn. You've sort of detailed, which areas of the business the money is going to be spent in. Hamish just wants to know, how quickly are you going to spend it given the increased headcount?
Yeah, we're going to spend this in the next 12 to 15 months, Hamish. We intend to invest ahead of the curve. A lot of it, as I said, 44% is in enabling assets, so they will not be cash burn investments. That they'll be assets added to the business. 25% are about increased capability, arms and legs, headcount. And so 25% equates to about just over $3 million. But we see that investment as self-sustaining. So after the first 12 to 15 months, the value and the cash that starts to be generated from this investment is designed to cover that extra arms and legs, if you like, that we're bringing in. And of course, the remainder is external costs such as legal, etc., which of course are not recurring.
Okay. A question from Anthony. You've kind of touched on this. You've talked about your passion for CO2 reduction. We know that a lot of the money that you're raising is going into the battery part of the business. But this question from Anthony specifically says, considering the many applications of your tech, which is most likely going to be your primary target for application? Is that batteries, or is it something else? I have to break that up into timeframes. Certainly our primary target for application, well, we're already in water, of course. Our primary target for application, say in the next 12 to 18 months, is both in the CO2 mitigation and sustainable processing steps. So we're already in discussions around licensing and projects. And so we'd be hopeful that we can achieve what we're setting out to achieve here and bring either one of those two or both to a project or license agreement. So they're a little bit ahead of the game than the biotech and advanced battery space. So hopefully that gives an idea of what we're thinking there. Okay. A question from Peter. Sorry, we've got lots of questions. I'm going to try and get through as many as we can in the next 3 minutes. How much intellectual property protection do you have?
We cover the core technology with a patent. That patent was originally a 2006 dated patent. We updated that again in 2016 with all of the developments that we've had with the technology. So the core technology with a patent dated 2016 is then protected out to 2036. And then each application that we develop for the technology, we also patent. So for example, even the water business, where we're making we're getting a high surface area particle and then we're making that into a special alkali to add to water treatment. That process is patented. All of the battery work, the biotech work, the CO2 mitigation work, the sustainability processing, we have at least 2 layers of patents across all of this. And so patents is one way to protect your IP, and the other is you don't reveal all of the secrets in the patent. The patent is as broad as possible to cover, to give you the best chance to defend your position against anyone who's trying to steal your IP or copy it. But then there are a lot of smarts in making the technology work that you wouldn't write into a patent, and we don't. And so it would take someone quite some time, if they just really set out to copy us, to really be able to achieve what we've achieved.
Mm-hmm. Interesting question from Phil. What future do you see for carbon sequestration when science worldwide has so far been unable to produce successful long-term solutions? Does Calyx have a storage concept theory?
With respect to sequestration, it certainly is an important part of CO2 mitigation. In terms of the cement and lime industry, for example, there's no alternative. They have to produce CO2 because they're processing limestone, and they're producing so much, like over 2 billion tonnes a year, that there has to be a sequestration solution, if you like, for that part of the CO2 equation. It's not our core business to be in geology, but I'd contend that there have been successful CO2 sequestration projects. So certainly a lot of time and effort is going into that sequestration piece. In Europe, there's probably half a dozen sequestration hubs that have now grown. where they're looking at sequestration or just about to start it. And so I think sequestration is a part of the story that yes, does have to grow and develop, but there have been successful sequestration demonstrations. And in the US, for example, it's already happening right now. For enhanced oil recovery, for example, they're injecting CO2 back into the ground. And basically what happens underground is that CO2 remineralizes, it reforms basically limestone rock. So it is a solution that's going to have to be used. I'm not advocating it for all of the power industry, for example, or fossil fuel industry, but for industrial CO2 emissions, it's going to have to be a part of the solution.
Okay, I'm going to try and squeeze in one last question. In the event of further success, this is specifically in the battery segment, what's your plan, I guess, your view of realizing value? Are we looking at a spin-off, selling it, keeping it and growing it?
Yeah, all of the above. In the end, I think you will see with CO2 mitigation and some of these sustainability pieces that, for example, CO2 mitigation, we're not going to be a cement or lime producer. We're going to license that technology out because the opportunity is huge and it's a commodity industry, and why play in it? In the battery space, we're keeping our options open. That industry could certainly be huge, and so a licensing model may be the best way to realize value. But if we see more value in taking part in the value chain in batteries, producing a cathode material, for example, that's superior, and keeping that in-house and selling that, we're certainly going to be considering that model as well. So I know I haven't answered the question as fully as perhaps wanted, but we're keeping our options open and working out how to get best value, and we're considering all of those business models.
Great. All right. We are going to have to leave it there because we have another presentation starting in a couple of minutes. Phil Hodgson, thank you very much for your time. Fascinating stuff. Talk soon.
Thank you very much, Kylie. Thanks all for your time.
Thanks, everyone.